If you've ever looked at your business numbers and thought revenue and income were the same thing, this video is going to save you a lot of stress. Today, we're talking about revenue versus income and the biggest mistake new business owners make when they mix the two. By the end of this video, you'll understand what revenue and income actually mean, why confusing them leads to bad decisions, and how to use the right number to price, plan, and grow your business with confidence. Plus, I'm going to share one bonus insight that could save you a lot of financial stress down the line. Hi, if you're new here, I'm Rihanna. I trained and worked as an auditor and accountant. My goal in this video is to take complicated financial concepts and turn them into simple, practical systems so you can make informed decisions and grow your business. Most new business owners believe that as long as money is coming in, business is growing. Revenue feels like success, especially when the number is big. But the truth is, revenue is not the number that matters. Income, what's left after your expenses, is the number that tells you whether your business is healthy or just busy. All right, let's start with the basics, because if you don't understand the language, everything else just feels confusing. So revenue, sales, and turnover, those all mean the same thing. That's the total money your business brings in before anything else is deducted. You'll sometimes hear people call it the top line, and then we have income, profit, and earnings. Again, same meaning. And that's the money left after you subtract your business expenses. That's known as the bottom line. Profit margin or income margin is the percentage of revenue you keep after your expenses. So if you make £1,000 and keep £300, your margin is 30%. The higher the margin, the more profitable and sustainable your business is. And here's an important detail most people aren't told. Tax is charged on your income, not on your revenue. So after tax, that is the money your business truly owns, and eventually that's what pays you. So to put it simply, revenue is the total coming in and income is what remains and what matters. And here's the mindset shift. One number makes you feel like you're growing and the other tells you whether you actually are. This is where things get real, because most new business owners make decisions based on revenue, not income. And that can create a false sense of confidence. Let me give you some examples. You might feel confident buying new tools or software because you had a high revenue month. Or you might hire support because sales look strong, even though income is low. A common one is discounting prices. Your revenue might still increase, but because your income margin shrinks, you often end up working harder to make less. And then there's the break-even point. If you're not at the break-even yet, it doesn't mean your business isn't working. It just means something in your pricing or your spending or your structure may need adjusting. And this is also why some businesses look successful online, saying things like, I made £18,000 in 1 month. But behind the scenes, they're barely breaking even and making little to no real profit and actually burning out. So the important question becomes, are you looking at the number that tells a story or the number that looks impressive? Now that you understand the difference, here's how you're actually going to apply it. Step 1, know your income margin. The formula is simple. Income divided by revenue times 100. This tells you the percentage you're keeping. And as I said earlier, the higher the number, the healthier your business is. Step 2, use that number to guide your decisions. Before spending or investing, ask, can I reduce expenses? Do I need to adjust my pricing? Will this improve my income or just increase my revenue? Step 3, plan based on income, not revenue. Pricing, tools, outsourcing, even when you pay yourself, should all be based on what your business actually keeps, not what it brings in. Once you start thinking this way, everything becomes clearer. You're not guessing, you're not reacting, you're actually building intentionally. So from today forward, the number that matters isn't how much you made, it's how much stayed in the business. Now, here is the bonus insight that prevents stress later. This is the part that most people don't realize until it's nearly too late. You don't build a sustainable business based on revenue. You build it based on income, because income gives you options. Options to slow down, options to reinvest, options to pay yourself with confidence. So from today, instead of asking, how much did I make? Start asking, how much did I keep? And what does that allow me to do next? So just to recap, revenue is the total coming in. Income is what stays after expenses. And your income margin is a number that shows how healthy your business really is. When you start making decisions based on income instead of revenue, you'll price better, plan smarter, and grow with confidence. Now, if this clicked for you, watch these next videos